Buyers in Warner Robins and Middle Georgia are still waiting on interest rates to drop, while sellers are still holding out for top dollar to sell their house. But their houses are staying on the market for over 40 days. So who's really in control of this real estate housing market in Warner Robins? Well, stick around because we're going to explain this little tug of war, and you can decide for yourself if you want to buy in Warner Robins or if you're ready to sell. So let's get busy. Hey guys, I'm Chris, your real estate problem solver. I'm a real estate investor and an agent in the Middle Georgia area. So if you've got any questions about the real estate market in this area, Warner Robins, Bonaire, Kathleen, Perry, even Hawkinsville and Macon, reach out to me. My information is in the description below, and I'll give you all the 411 about the housing market in the Middle Georgia area. So what is going on with this housing market? So let's start off with the market prices. Right now, buyers are still holding out for houses to drop because they're expecting them to. On the other side, sellers are still trying to get top dollar for their house. So in this situation, when you've got sellers that are still holding out for top dollar and buyers are only willing to pay so much, that's creating a gap between what buyers and sellers are coming together with. If you are interested in the stock market, this is going to be the same scenario that you would see in the NASDAQ or the S&P 500. When a certain stock gets a big gap between the buyers and the sellers, there's usually going to be a breakout. Now you comment below whether you think it's going to break out high or break out low in the housing market. So as for the housing market, when this gap gets big enough, it's eventually going to either go high or it's going to go low. And there's a couple different factors that are going to make that decision for us. One is going to be the interest rates. Now, a lot of people have been waiting for the interest rates to drop, but there's one point that a lot of people forget. Interest rates typically go between us 8 to 10 year cycle. Now we went through a 10-year cycle of 3s, 4s, and 5s, and everybody was loving it. Well, now we're in the 5s, 6s, and 7s, and people are hating it and they're thinking that it's going to go back down. But if it's on an 8 to 10 year cycle, are you willing to wait that long to get a lower interest rate while the value of the houses are steadily climbing? Because keep in mind, housing markets do typically climb, which is called appreciate, 3 to 4% in the Middle Georgia area on average. So are you willing to wait that long to get a lower interest rate in lieu of having to pay a higher price later on? So with that being said, should buyers wait for the interest rates to drop? The interest rates usually tend to follow the 10-year bond market. So if you look at the 10-year bond market, the last 5-6 months, it's kind of been slipping on a downhill trend. But the interest rates are still in that same general vicinity of what they were before. So it is chances that it's going to drop a little bit, but is it really going to be enough for you to warrant holding out on buying your next house? Chances are, if you run the math, it's probably time versus money. It's not really going to be worth it. And then the last point about the interest rates is the last 20 to 25 years, even though we had a low point for a long time, 6 to 7% is still the normal range for interest rates in the United States. And that's exactly what the range is that we're sitting in right now. So chances of it breaking out low is possible, but I wouldn't hold out for it. And if you're really worried about getting the best interest rate possible, most lenders will offer the option for you to buy down the interest rate, which means you pay a little bit more at closing, but the interest rate would be bought down to by 0.5%, by 3/4, or even a whole percent. And over the life of the loan, it will financially come out better. Now, the housing market in Warner Robins on the seller side is particularly interesting. Over the last 6 or 7 months, they've been pricing their houses at top dollar, which means it's been going out there for as much as they can possibly get. But they've also been staying on the market for over 40 days. Some of them have been on the market for as much as 100 days. And it's really interesting that I see these houses going on the market and I get the email notifications of these houses. But then I turn around and get the next day a list of all these different houses that are getting price drop, price correction, price drop. And with them staying on the market that long, where they really set it the right price to begin with. Now, one little trick to these houses being on the market for so long is when you price a house, you have to compare it to the houses that have sold recently in the area that are similar as possible to the house they're trying to sell. And when the market starts to change, you have to be aware of that change and you have to get ahead of the curve. So if the curve is leaning up and you've got a $200,000 house, then chances are you can probably price it at 205 and get ahead of the curve and get the house sold. On the other hand, when the market has a downward tendency, your $200,000 house last week is probably going to need to be marketed as a 195 house, because you have to get ahead of the curve. Whether it's going up or going down, you still get ahead of the curve. Or if the market is in a downward trend, which is what it's kind of looking like right now, is you're going to end up chasing its tail all the way to the bottom. So would you rather keep trying to push for top dollar for 100 days? Or would you rather take a $5,000 or a $10,000 deduction now and go ahead and get the house sold versus losing $20,000 or $30,000 over the course of trying to sell it for the most money? Now, granted, there are 15 to 20% of the local inventory right now, which isn't very much. Right now, we're averaging about 300 to 400 houses being listed per month, but we've also are selling about roughly 100 houses per month. So we've barely got a 1 month inventory, even though these houses are staying on for 40 days plus. Only about 15% of them are actually getting their asking price or over their asking price. So the rest of them are having to do a price reduction to get their house sold. So if you're selling your house in Warner Robins, make sure to keep that in mind. And many of the houses that are getting full price and getting over asking price are newer houses or newer construction houses. So they're brand new, they've got nothing wrong with them. If you have a house that is not brand new or not in the greatest of shapes, then you might want to make sure you adjust your price accordingly. All right, so the next question that a lot of people are asking is the lower price houses are all getting snatched up by the investors, right? Actually, not really. I've had 2 listings in the last couple months, and both of them were $150,000 or less. And both of them had about half homeowner offers and half investor offers. So while a lot of people are complaining that these investors are coming in and snatching up the cheaper houses to keep as a rental portfolio, in reality, yes, they come in with cash, but they don't come in at full price. So on the other hand, these owner occupants, you the buyer as a public buyer, are coming in with conventional loans. You're coming in with FHA loans. So as long as the house qualifies with FHA or qualifies for VA or qualifies for the conventional loans, public buyers tend to offer more money. So while a lot of people are complaining that the investors are the ones getting these houses, it's not actually true. A lot of sellers are looking for top dollar, and the retail buyers, the public buyers, are the ones that are bringing the best prices. As a matter of fact, the one we just went under contract with is a public retail buyer. They're going to live in it themselves. So that kind of debunks the complaints about the investors. So the next question is Middle Georgia housing market really on a downward trend? Well, yeah, it actually looks like it. We're already 3% lower than we were year over year from 2024. So the housing market has slowed down, it has stabilized, and in the last couple months, like I said before, I'm getting email notifications of price drop, price drop, price correction, price correction, price drop. So while these people are trying still to get top dollar, it's actually more pushing higher and higher prices, and it's not working. So they're having to come back to the prices that the houses were originally worth maybe a year and a half ago. So it's not a big correction, but it is a correction. It's an indication that the Warner Robins housing market has stopped climbing. It's not falling, but it's not going to progress any higher right now. Now, what's going to happen in the future? Right now, we've got a couple different factors in the middle Georgia area, particularly because a lot of people in the military relocating to Robins Air Force Base are responsible for a lot of the house sales and house purchases in the middle Georgia area when PCS season comes around. Well, if you haven't heard, the current administration has put out a request that the military cut back their PCSs to 50% over the next 4 years. Well, if they cut back PCSs, that means the active duty military that is currently in the Warner Robins area are not going to be relocating nearly as much as they used to. And in fact, they're going to be staying a little bit longer, which means there's going to be fewer houses available on the market for sale. Now, another factor of that is a lot of the military that come into Warner Robins have a choice between renting and buying. Surprisingly enough, a higher percentage of active duty military that's come to Robins Air Force Base decide they'd rather buy rather than rent. And then once they buy the house, they usually try to buy a moderate house, a nice medium priced house that when they move out and they PCS to their next station, they can keep for wealth building and rent it out as a retirement plan. So they buy the house when they come in, but they don't sell the house when they leave, which means again, there's fewer houses on the market for sale, which could possibly drive the prices back up once this new order takes effect. So with all that being said, which do you think is going to go? Do you think the prices are going to start shooting back up in Warner Robins? Or do you think it's going to continue to fall and you're waiting to get the best deal? Make a comment down below and let me know what you think, and we can talk about it later. So now that you've got a little idea on what's currently going on in the Warner Robins housing market, check out my videos here that explains if you decide that you want to sell, how to get your house prepped to get top dollar for your house. And if you're ready to buy, then you need to check out our videos that explains what you need to do to get yourself ready for a down payment, for your credit score, for your debt to income ratio, to make sure that you're ready before you even start going shopping for your next house. So whether you're deciding to sell your house or you're wanting to buy your next house, reach out to me. I would love to help you make your next transaction as smooth as possible. And I'll talk to you on the next video.